Stocks tumbling today. The Dow down 332 points. The Dow and S&P both in the red for the year. Investors continue to grapple with the idea the Fed might finally be ending the party. With more on this, David Nelson, chief strategist at Belpointe Asset Management. Welcome back to the show, David. So why have we had such a sell-off?
Well, there's several issues. You brought up the first one. People are starting to anticipate a possible Fed move before the June meeting. And I'm not in that camp. I think they've been very clear about what they want to do. But nevertheless, the headlines are out there. That's spooking investors. The number two issue is this rising dollar, because it's wreaking havoc not just on earnings, but on a lot of things for corporations.
Well, if you're trying to sell stuff overseas, you're hard-pressed to make money, that's for sure.
It's pretty tough, and you're hearing it in the conference calls, every one of them.
So let's talk a little bit about the six-year-old bull market.
Right.
You know, this could be the end of this. What do you think? What do you see for stocks going forward?
That's a big call. That's a big call to say that this is the end
That's what I'm asking.
Well, I'm not ready to go there just yet. It's hard for me to argue a case for the indices. They're not terribly expensive, but they're not compelling either.
Why not?
Underneath, well, the valuations, you're about 17 times forward earnings. You've got interest rates that are about to go up. That will likely put pressure on multiples. And we came into the start of the year with 7% growth, and that's being slashed because of this rising dollar. So it's hard for me to make a case for that. Not having trouble finding stocks, but the list is getting a lot smaller.
You know, we were talking about rates before, all eyes on the Fed. When will rates go up? You say June, as they originally said they would do. You know, that's what they said. But let me ask you, you say they can't do it right now. Why?
Well, we were talking about it. There's language in there that says that they have to remain patient. They got to remove that language first before they can raise. Number two, they don't want to spook investors.
What about wages, though? Can you raise rates here when wage growth is non-existent?
Well,
when the employment market is still pumped?
You've hit on a really important topic. A lot of people were talking about the great jobs numbers. The hole in that story is wage growth. It's almost non-existent, 0.1%, and the Fed would like to see that higher because that's a key component of inflation, and they're targeting 2%. We're just not getting it. That's the Achilles heel of this economy.
Now, you talk to individual investors all the time. I know you're giving advice to people. What would you tell people tonight as they look out at this market that's trading south, a bull market that's a little long in the tooth, possibly? What should folks be doing?
Well, I think you got to stick with your game plan. If you're trying to trade in and out of the market on a daily basis, there are managers out there with tactical strategies that are doing it professionally. If you're just trying to trade the tape, on the latest headline, you're going to probably significantly underperform. Have an asset allocation strategy in place that's going to weather you through rocky roads.
I have to tell you, every time I try to buy something on the news, I get screwed. It just doesn't work.
And sell something on the news. You wake up the next day and it's infinitely higher. So trading the tape is not the way to go.
As you look forward, though, a lot of people, they're sitting on the cusp of retirement. Maybe they're just in retirement. These are critical times for them, and they're worried that 2007, 2008 is going to happen all over again. What would you tell them? They're worried about stocks tonight.
I think, and they should be worried about bonds as well, because we're going into a hiking interest rate. There may be no safe haven. Look, if you're not diversified and you're just, you're pushing the edge of the envelope because you underperformed over the last 10 years and you're trying to secure that retirement, don't do it. You've got to have your assets diversified. Do not put all your money in stocks. Do not put it in any all-in-one asset class. You can't do that. It's just too dangerous.
All right, so stick to your guns, stick to your plan.
Right.
David, great to see you, and thanks for coming on the show.
Thanks for having me,
Great
Gerri.
job.